What if I told you that some of the richest people in America legally live off their wealth, without selling their assets and without paying the taxes most workers pay every year? It sounds impossible, maybe even unfair. But it's not a secret loophole. It's a strategy. A strategy quietly used by investors, real estate moguls, and billionaires for decades. And it's called buy, borrow, die. Today, I'm going to break it down in simple, clear terms so you can understand how it works, why the wealthy use it, and how it completely changes the way money flows in your life. Because once you understand this strategy, you'll never look at income, assets, or taxes the same way again. Step 1. Buy assets that grow. The first step is simple. You buy assets that increase in value over time. This could be real estate, stocks, index funds, businesses, even certain types of insurance or collectibles. Let's use a simple real estate example. Imagine you buy a property for $1 million. Over the next 10 years, the property grows in value and becomes worth $2 million. You just gained $1 million. But here's the key point. You don't pay taxes on that gain unless you sell. That growth is called an unrealized gain, and unrealized gains are not taxed. The same thing happens with stocks. If you buy $10,000 worth of shares, and they grow to $100,000, you owe no taxes, as long as you don't sell. So, the first rule of this strategy is simple. Buy assets that grow, and hold them. Step 2. Borrow instead of selling. This is where the strategy becomes powerful. Most people, when they need money, sell their assets. But selling triggers taxes. The wealthy do something different. Instead of selling, they borrow against their assets. And here's the magic part. Borrowed money is not considered taxable income. Let's say you own $1 million worth of stocks. Instead of selling $100,000 worth and paying taxes on the gains, you borrow $100,000 against your portfolio. You keep your stocks, avoid taxes, still get the cash, and your investments continue to grow in the background. The same principle works with real estate. If you buy a home for $500,000 and it grows to $1 million, you can take a home equity loan or refinance and pull out $200,000 tax-free. You still own the property. It still appreciates. But now you also have cash to spend or invest. This is how many wealthy investors fund their lifestyles and grow their portfolios at the same time. Why the wealthy love borrowing. Most people think debt is bad, and in many cases, it is. But the wealthy use debt differently. They don't borrow to buy liabilities. They borrow against appreciating assets. Here's a simple comparison. If you sell $100,000 in stock gains, you might lose $20,000 to $30,000 to taxes. If you borrow $100,000, you pay zero taxes. You only pay interest, which is often far lower than the tax bill. So instead of losing money to taxes, they keep their assets growing and use loans as their income source. Step 3. The die part. Now we come to the final step of the strategy. Eventually, everyone passes away, and when that happens, something powerful occurs in the tax system. It's called the step-up in basis. Here's how it works. Imagine you bought a property for $500,000, and over your lifetime it grew to $2 million. Normally, if you sold it, you'd pay taxes on that $1.5 million gain. But if you pass the property to your heirs, the tax basis resets to the current market value. So instead of inheriting a $500,000 property with $1.5 million in gains, your heirs inherit a $2 million property with zero taxable gain. If they sell it for $2 million, they pay no capital gains tax. The entire lifetime of growth becomes tax-free. That's the final step of the strategy. The full cycle. So, the strategy works like this. Buy assets that grow in value. Borrow against those assets instead of selling them. Die, and pass the assets to your heirs with a step-up in basis, eliminating the taxes on the gains. This allows wealth to grow, be used, and be transferred across generations with minimal tax impact. A shift in how you think about income. Most people think income only comes from a job, a business, or selling investments. But the wealthy think differently. They focus on building large asset bases and then borrowing against those assets to fund their lifestyle. The bigger the asset base, the bigger the borrowing power. And the bigger the borrowing power, the more tax-free cash flow they can access. So instead of asking, "How much can I earn?" they ask, "How many assets can I build?" Because assets create freedom. Income from work creates limits. Important reality check. Now, this strategy isn't magic, and it's not for everyone. It requires discipline, long-term thinking, appreciating assets, responsible borrowing, and of course, tax laws can change over time, so always consult a qualified financial or tax professional before making major decisions. Final thoughts. The buy, borrow, die strategy completely redefines what income can be. It shows that wealth grows best when it's left uninterrupted, taxes only apply when gains are realized, and borrowing can become a powerful financial tool. Once you understand this, you stop chasing paychecks and start building assets. If you found this video helpful, make sure to like, share, and comment below with your thoughts. And don't forget to subscribe to MMT Community for more simple, powerful insights about money, investing, and financial freedom. See you in the next video.